Hey, badass business owners, whether you have a small business or you're thinking of starting a small business, it is mission critical that you understand your business numbers. You don't just want to create a job, you want to build a future where the sky's the limit on the potential profit that you can earn in your business. And you do this by understanding your business numbers. And one of the best places to go to start learning your business numbers is your profit and loss income statement. So in this video, we're going to take a look at the basics of understanding what this document is trying to tell you. Now, your profit and loss statement is also known as an income statement. So sometimes you'll hear it called a P&L, or you'll hear it called a profit and loss, or a profit and loss income statement, or just an income statement. All of those terms are all referring to the exact same document, and it gives you a quick snapshot of your business because it's going to break everything down into sales, cost of goods sold, expenses, and profits. And the main purpose of why you have it is to tell you if your company and your business is profitable or not, and also to let you know where the money is going in the business. Now, I want you to understand the number one calculation. Before we even dive into this, if you memorize nothing else, I always tell all the people that I coach and talk to that you need to memorize this calculation. Sales minus cost of goods minus expenses equals profits. You need to remember this when you're pricing, when you're dealing with the public, when you're setting anything to do with your business. At the end of the day, the way you go from sales, top line, what you bring in, to the profits you put in your pocket, you have all this stuff in the middle that's coming out, your cost of goods sold and your expenses. So if you always remember sales minus cost of goods minus expenses equals profits, you're going to be able to make sure that you're doing the right thing when you're pricing, when you're doing bids, quotes, all these different things. So make sure you memorize that. Now let's take a look at the profit and loss statement and how this all ties in. Now, first thing is profit and loss statements can look a lot of different ways. It doesn't matter what it looks like. Some people do them on an Excel spreadsheet. Some people will create their own manually. Some of them have them in ledgers. Some of them have an online bookkeeping tools. If you use any online bookkeeping tool or desktop tool, there is a report that you can print called your profit and loss statement. The most common one looks like this in some way, shape, or form. Now, it's broken down into different categories. The first one is money coming into your business, sometimes called income, sometimes sales. Everybody calls it something different, but at the end of the day, it's the money you take into your business, and it's all types of money that you may take. So if you bring money in, it goes in this top section here. The next biggest chunk is all the money going out of your business, and these are going to be those cost of goods sold, operational expenses, any types of money that you pay anybody for any reason. That's all going to come out in this middle section here, which then eventually leads down and trickles down to the profits that you have at the bottom. And this is the money that's left at the end of the day. And this is for the owner. All right. Now, this doesn't mean that what you're paying yourself is automatically coming out of here, because sometimes you're paid as an employee and sometimes you're paid as an owner. And I talk about that in other videos. It's very, very important you understand the difference, because it's going to determine where it goes in here. Because for some people, it might be up here in a cost of goods sold, and other people, it might be down here as expenses. And for some people, it's 100% down here in profits. But typically, it's only down here 100% in profits if you have employees and you don't do any of the work. But if you work in the business, odds are it's going to be up here in operational expenses or cost of goods. Like I said, see the other videos that I have on yourself, because I think it's important that you know that. All right, next thing we want to talk about is, let's take a closer look at each of them. So we have the income that we have, what we talked about, that's the money coming in, but your outgo is in two places. One is your cost of goods, and this is basically any money that is part of producing the product. So for example, if you sell widget A, then let's just say you sell a guitar. Okay, if you sell a guitar, then your cost of goods is the cost it costs you to get that guitar. If you build the guitar, it's going to be the parts that you buy to build the guitar. Now you're going to notice this one has wages in here, and that's because if you just buy the guitar, you don't have anybody assembling it, there are no wages. But if you assemble that guitar, in order for you to put that cost together, somebody has to be paid to put the guitar together, and that's why those wages would go up there. In this case, this happens to be a landscaper, and obviously landscaping doesn't happen without the people, so his payroll goes up here. Now, the next thing you have is this one little line that's squeezed in, and this is called your gross profit. And this is the money that's after you take the sales in, then you have the cost of goods going out. Gross profit and gross profit margin, they kind of go in the same line. This is just the money you have before you pay your expenses. So a lot of times people think this is just their profit and they just start taking the money. The reality is, no, you've got bills to pay, and that's where this next section comes in. These are the bills you have to pay after you take the sale and you buy whatever you need to sell what it is that you sell. These are going to be for your auto. This is going to be advertising, credit cards, any other payroll that you have, rent, maintenance, equipment, whatever the case may be. Everything else falls down into this big chunk, and it can get pretty long depending upon how you have it all broken down in your business. And then finally, you get all the way down here to the profit line, and the profit's going to be after everything is taken out. We kind of talked about that a little bit earlier. Now let's take a little bit closer look, and you'll see here for the income in this particular one, he has the services that he provides. He has the products that he does. He's got, sometimes you make interest off of stuff. Anything, like I said, that's coming in. You'll see refunds. They do go up here because this is income that came in and went right back out. There was no cost associated with them. And if there is, you capture those a little bit lower, but this is just the money coming in to the business. Now, when you get down here to cost of goods, in this case, he's going to have his material costs for being a landscaper, like rock and, if he's got to buy trees for somebody, weed control, stuff like that. But he's also going to have his wages, because as a landscaper, he's going to have to pay his team in order to do the job. And let's just say he was a solopreneur. He would be paying himself a basic wage to go in here, because he really has to capture that in his cost of goods in order for him to get a true cost of what it costs for him to do that particular job. And that's going to go in this section here. Earlier, I told you about the gross profit. Sales minus cost is equal going to be your gross profit, your gross margin, and stuff like that. So in his case, he started out, he's got $18,000 left from paying those other two, because he had the 17. And actually, if I go back a couple, he started off with 36 in income. And then when he came down here, he had 17,000 in cost of goods. So his gross profit just means he's got $18,000 left in order to pay the rest of the bills that he has in that business. And when we take a look at those operational expenses, like I mentioned, he's going to have all kinds of different stuff that's in here. And all of those are going to add up. And you're going to see down here that it's $7,500 that he had an additional expenses in his business. And then those are going to come off, so we can get down here to those profits. So profit-wise, he made $11,000 in profits that particular month, and after he had paid everything. So it started off in sales at 37, but by the time he got to the bottom, it was 11. And that's what he's able to dive into to understand his business numbers, because now he can actually go back and take a deeper dive into any of these categories to be able to understand where his money's going and why it left. Like, he can find out, what did I spend the $600 on? What did I spend the $705? Holy cow, my telephone expense is $705. What do I have telephones? Whose cell phones am I paying? Truck and auto, why is it this? So what you're able to do by knowing your business numbers and the flow of money through your business, you can start asking questions to see where your money's going. So you can see it flow in, and then you can see it flow back out. And that's what you're looking for on your profit and loss. Now, remember that calculation earlier? Sales minus cost of goods minus expenses equals profit. Let's take a look here on the P&L and how that plays out. So we started off with $36,000 in sales, minus our COGS, which were 12,468, right? Minus our expenses of 7,500, and that brought us down to this 11,000 down here below. So like I said, when I tell you to memorize sales minus cost of goods minus expenses equals profit, now when this landscaper is out in the field, he can use numbers to start figuring out if he's pricing it correctly. Because you're going to notice over here, there's some percentages, and by using the percentages, yes, he may not know the exact amount he needs to pull out of any job for his operational expenses. He does know he needs to set aside this number over here of 20% that he has to set aside from any job that he does, because he's going to need it later to pay those bills. So by understanding the flow of money through his profit and loss, he's able to understand better when he's pricing, if he's pricing it correctly, and he's going to be able to make his profit and loss work. Another thing here, just remember, your profit and loss income statement is your report card of your business. It's going to tell you if you're doing well or if you're not doing well. And the reason it's called profit and loss, report is because there are months where you're going to lose money. And I have other examples of P&Ls that I use in the course that show you how someone can get to the end of the month and really make no money, because at the end of the day, the business is responsible for paying its bills, and sometimes it goes in the black. And you might find that for yourself, that sometimes what happens is you don't have any money at the end of the month to pay all those bills, and it's because you pulled all that money out thinking it was yours. And the reality is, no, it's the business's money, not your money. So you can pay yourself as an employee in that business, but at the end of the day, you got to make sure that your expenses, and you got to know where to dive in to find out why you're losing money and to understand that. Now, there is a 6-part series that's out there, where we take a deeper dive into each of the categories. And so if you really are interested in learning a little bit more about your profit and loss, look in the playlist for that particular playlist, and we'll walk through that. And also, if you want to learn more, I do have a course called Know Your Business Numbers. And what we do is we take an even deeper dive into the profit and loss. It's a big section in there where we walk through a lot of different examples. We talk about stacking, which is putting month after month, looking at a pattern of behavior. So this way you can really dive in and find profits that you are bleeding out that you may not even realize that you're losing. So if you are interested in learning your profit and loss even better, just check that out. And if you like what you see, please don't forget to hit that subscribe button so you never miss a video. Hit like, and that way other people know that they should take a look at this video if they want to learn more about their profit and loss statement. Now get out there and become the badass that I know you are.